All right. Hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It is, what is it? Just a few minutes after 11 a.m. Central Standard Time here on the 17th of August, 2021 in beautiful Boerne, Texas. Hopefully you guys are doing well. I see Scotty was first one in there. Michael's here as well. Michael Williams there. Asum Risk is there. Data's here. Let's see here. Let me put on my glasses here, guys. I'm struggling a little bit this morning. Oh, let me see. There we go. That should be better. Hey there, Bill. Good to see you. Mike Kane is here as well. Yeah, we're going to take a look at what's going on here with, with Bitcoin and the dollar and, whatever else we happen to get into today. Don't forget, guys, you can join us here at howtotradetowin.com. And for right now, anyway, you can get a 40% off of your first month. If you haven't been with us before, 40% off the first month of Tier 3. Using that code I put up here at the beginning. What is that code there? Let me see here. It's Tier 3 monthly 40% off. Yeah. So use that code there. Checkout on the top part of the left side of the screen. It'll ask you, there'll be a little link that's ask if you have a coupon code. And if so, you click it, and then a little coupon box will open up. You put it in there, and you'll see that you'll get 40% off the first month of Tier 3 access. We'd love to have you here, guys. I've really got to do some updating with this website and all. But currently, we've got over 110 hours of video education now, 3 hours added every week. An hour of Wyckoff, an hour of crypto, hour of Wyckoff, an hour of Elliott Wave, and then an hour of rules-based systems. It's our tips, tricks, and techniques segment there that we do every Wednesday. But you do get those 3 live streams for Tier 3 every week, guys. And if you aren't making money after watching those, I'm going to be honest with you, just aren't trying. There's a lot of good information in there. Not every week is for everyone, or not every stream is for everyone at every time. But, if you're watching there consistently, you're going to find ways to make money trading, guys. And it's a lot better than nonsense that you see online, all the emotional BS and whatnot that you go in there and loses your money. You don't want to do that, right? So, anyway, yeah, we'd love to have you there. Plus, of course, all the other education we have and, chart requests and, chart critiques and all that fun stuff. So, anyway, we'd love to have you there. Come join us. Tons of stuff, more content than you can actually absorb in a month, guys. So, even if you just do it for 1 month, just be ready to get in there and get as much as you can because there's a lot of it. So, anyway, hopefully you guys are doing well. Who else is here? Anybody's checking in? 51 ETH. Good to see you checking in, man. Higher Low Crypto checking in as well. Devin's here. Diego checking in. How do I know it's Diego? Because it's always either red or blue, and I can't ever read it on the background there. So let me see. If I highlight it, yep, it says Diego. As Asum Risk says, there are a ton of great content. Join us, again, guys. These are the people that are in there doing what you're doing, and I think one of the best things that we have is that most of our members, significant number of them stay with us for years. And I think that's probably the best thing to say anything about what we do. Because obviously if it wasn't worth it, they wouldn't stick around, right? So there you go. Mark, what's up, man? Good to see you. He says, today shall be different for me. I'm outside on a ladder working on the plants. Well, as long as the ladder isn't high up and you aren't falling, my friend, that's all good. Enjoy that outside, man. Diego, no worries about it, man. I've learned to figure out which one you are, man, when you come in. So we're good. Anyway, hey, listen, guys, I was talking to you. I kind of gave you all a little hint of what's coming up in terms of giveaways. I said we're going to be giving away these PS5s, right? And, today, actually, gosh, I've got 3 of them. I've got one here. I've got 2 that are supposed to be sent from Walmart the first week of October. And today, I just bought another PS5. So that gives us 4 PS5s we're going to give away. And I'm not sure how many Xbox Series X's I got. I finally got them today. I got at least 3 or 4. I said I don't know how many because they eventually just cut me off. But it looks like some of my orders went through. So we've at least got 3 or 4 Xbox Series X's that I'll be giving away as well. And so just follow me on Twitter, guys. Make sure you follow me there so you hear about it. Or, join our the free side of our, what's it called? of our Discord server. Let me get you that link here real quick. And actually, let me just get this for you here real quick. And, I'll announce it on there as well. I'll announce what has to be done to get you a chance to win. But I don't know anybody else that's giving out so much of this stuff, guys. I've just been fortunate. There's the link to our free Discord there. I've been fortunate to grab a hold of them. If you guys have tried to get them for yourselves or for your kids or something, you will know how absolutely insane it is to try and get one, much less multiples like I've gotten. So we're going to do big giveaway through through Q4 of this year. So make sure you guys are following along so you can get your chance to potentially get one, right? Let me see here. What is happening? What's up, man? Checking in from Charlotte, North Carolina, huh? Good to have you here. Mark says, I have a large rear cushion, but about 6 to 7 feet up. Well, let's not chest out the large cushion, man. Ari, what's up, man? Yo. Q the action is here. Yeah, unfortunately, they are just USA consoles. That was the other thing. Thanks for telling me that, Bill. Unfortunately, it is what it is. It's just USA consoles. But I'll see what I can do for our friends, some kind of giveaway to add with it for our friends that are not in the U.S. And can't take advantage of those in particular. We'll have some. It'll be a big, huge blowout giveaway thing here as we get into Q4. So we'll do something. Let's see here. 51 ETH says, I have been diving in more into the socioeconomics of finance. If we speak about sentiment switching on a world scale, we might see more wars, more strict border policies, etc. Do you think what is happening right now is a show of that? More clues to the shift in sentiment? I think so. If we look, I'm a product of a military background. My parents were both military when they got married, and my dad ended up retiring after 22 years. So, I grew up around the world, moving around the world, moving every couple of years. And I grew up during that time of the Cold War. And so I was growing up in that, and then, I was around, as we saw the fall of the Berlin Wall and all that kind of stuff. And then we've seen, we've gone through the two desert storms we had there. We had around 1991 or so, and then again, coming up in 2001. And then we see what we're doing now. And so I've seen all the government shifts, and I've probably been more aware of the military side of it because of coming up with the military, and how government, makes those military decisions and whatnot. And so I say all this because I think what we're coming up to now, I see a lot of things over the last year. We've talked about, we had we're at this point where everybody's offended, okay? So instead of getting out there and busting their rear ends and working, whatever, everybody just wants to sit around and complain about they're offended about this, and that. And then there's the whole equality push, right? And then there's the looting and rioting, that we've seen not just here in the U.S. but across the world here as we went, and we've gotten everything we have, and now, then the border stuff, we saw this, we went from Barack Obama to Trump as far as, that shift, those extremes in politics, and now we're up again to the other side of the extreme with Biden and AOC and all them. And, we go through all that, and now we've got the Afghanistan thing, the pulling out there, and all of a sudden it's overrun, which, we knew was going to happen. But, again, we shouldn't have been over there in the first place. People have been trying for 1,000 years to unite the whole of the Middle East there, and it just has never happened. There's this whole cultural thing there. I'm not going to go into all that, but yeah, when we see where we're at right now with everything, it's a lot more extreme than what it's been in the past. And I do think we're probably coming up to that. Another great book to read, if you haven't yet, is called The Fourth Turning. And that, that kind of seems to me like we're up to that point. And basically, it just talks about cycles in society, cycles in history, And so I think we're getting up to the end of that, which coincides with the whole idea of what you're talking about there with the socioeconomic theory of finance. When you look at socioeconomics and the change that we're all seeing here and the things that are happening. So yeah, I think so, man. I think there's a lot of that coming in here, and that's one thing that I've been watching quite a bit of. So yeah, it's a pretty cool thing to study if you haven't ever studied it before. You know, but at the end of the day, that's all the markets are, guys. It's people, right? I think a lot of traders come in and they see what's on the chart there as just what's on the chart. They think that this is the market. And it's not, this is not the market. This is just a visual representation of the market. The market is this exchange between people. It is their push and pull between fear and greed. It's their emotions. It's their feelings. You know, it's how are they feeling about things? That's what this is. So that's really the market. This is just that show of it. And I know it may seem like semantics if you don't really sit down and think about it at first. But once you do, you realize, man, okay, so this is pretty significant here. You know, what's going on otherwise that's showing up here. And it's not here that's the market. You know, it's what everybody else is doing. And that's why we say, you know, everybody's always worried about, oh, what if the whales do this? What if the whales do that? And I keep trying to explain to y'all that if the market is not ready to go in that direction, it doesn't matter what the whales do. If you know, people are worried, oh, the whales are going to dump on you and push price down really far. Well, if the market is bullish, it might push it down temporarily, like just a quick low and then back up. The market's going to absorb all that and send it up. Historically, there's these things that have happened where that's been tried and it's just been gobbled up by the market. You know, you can't make the market do what it's not ready to do. That's the whole idea of Wyckoff and what we look at in the ranges and the testing of supply and demand. Because you can't make the market do what it doesn't want to do. The market itself is larger than you as a whale or what you're willing to put in there, you know, for the most part. And so, you know, if the market is that, you know, that bullish, for instance, or if it's that bearish and you think you're going to buy it all up and just send it up and they'll just absorb all that demand you're throwing in there. They'll just, you know, douse you with supply till you're worn out, till you have no more, and then keep going down, right? So, yeah. Let me check here. Let me see. Samir, what's going on, buddy? He says, I find myself struggling with confidence on shorting something when the price action looks pretty much like going that direction. Any tips on how to get some confidence? Yeah, so, you know, here's the thing, guys. The number one thing you can really do to help yourself out as traders is to trade in the direction of the trend. Okay? So, like, this trend is up here. I wouldn't, you know, especially if I'm a new trader, I would just be interested in longing. You know, as it pulls back here and then breaks out and, you know, confirms, you know, or gives you confidence in that count, you know, that's when you long. You don't try and catch a knife. You don't try and short on the way down. Because anytime, even if you're experienced, guys, even if you've been doing this for years, trading against the market is difficult. And the best way to understand it is studying Elliott Wave and looking at how many possibilities there are for corrective structures. There's always so many different ways it can go. And so, as a trader, you know, you get over, you're like, you know, and you're trying to trade this correction, and the correction becomes something different than what you thought it was. And you get caught in there. And so, most traders are okay. They can get this move up, and they're fine with that, and they make money with that. And then they lose it all and maybe more on the pullback because they can't get the, you know, the correction, or because the correction is difficult. So that's the one thing you could do. But as for shorting in general, I mean, you know, again, it sounds like you're just having issues with you're struggling with actually being able to step in and short. So you're looking and you go, man, it looks like I need to short, and then you don't short. Again, confirmations. Learn more about price action. Elliott Wave is a great thing to do with that because you understand how things are moving. And then you start looking for, you know, your 5 down and then your 3 up. And then it goes down and breaks down through that, you know, that point where it adds more confidence to your account. And that's when you short. You don't just short at the top. You know, trying to short at the very top is like trying to catch a falling knife. What you're trying to do is you're trying to reverse at that event, at that highest price or that lowest price. But as I continue to tell you guys, that's not the way to do it. You're going to lose most of the time if you're doing that. It is your risk-reward ratio is not worth it on that, okay? So, the best way to trade and all is always to wait for the reversal and then the confirmation. That's the best way to do it. If you're doing anything else, you are necessarily increasing your risk. And for most of y'all, especially if you're new, you shouldn't be increasing your risk like that. Because you're new. I mean, you've got to be honest with yourself, guys. When you're new, you don't know what you don't know. You don't have the experience to do things well. And so if you're looking for the more difficult trades, which are your corrective trades, the ones where you're trading against the trend, you're necessarily going to have a lot more difficulty and be a lot more wrong when you're doing that. I hope that makes sense there. Let's see here. Joe the Butcher has been trying to get your son a PS5 since Christmas. Well, my friend, when I get this thing going, man, make sure that you do whatever's required in there to be entered in that drawing, man. You may be able to get him one. Like I said, I think I've got 1, 2, 3. I should have 4 PS5s right now, and then, like I said, at least 3 or 4 Xbox Series X's. I've been trying forever for the Series X's and finally got them today. GameStop drop. So, yeah. Now, let's see here. Red Dawn? That is a good movie. The original one with Patrick Swayze, yeah. The remake wasn't too bad. That was good there. Bill suggests maybe a box of Earl Grey tea as a prize for the tea-loving Brits. Let's see here. Did I get proper technique down for crouching under your desk in case of a nuclear attack? Ace and Risk talking about what we went through during the Cold War. Yeah, it was crazy, man. We were all taught, elementary school and everything, get under your desk, put your book over your head. Like that's going to keep you from, dealing with that radioactive fallout, right? Oh, good times, good times. Higher Low Crypto saying destabilization campaign on multiple fronts. Joe the Butcher says China eyeing its historic territories as the West steps back for the Middle East, getting bold. Yeah, there's a lot of change going on, guys, and that's the thing. Sentiment is not looking at your Twitter feed and going, oh, everybody's bearish or oh, everybody's bullish. Because again, as I've explained to you guys, in social media, Facebook, Twitter, whatever you've got, your feeds are curated to you. It's not just whoever. They feed you content that they think you want to see. And that's what they're doing. And so whether you want to see whatever's come up or not, based on the things you type in there, or the things you say if it's audio, or the things you look at, with the things that you're being tracked about, these little AI programs, go in there and they kind of build a profile of who you are and what you want to see. Because their goal is to keep you on their site longer. Because that means more money for them. So don't ever think that because your feed says, oh, it looks like everybody's bearish, everybody's bullish, that's a sentiment check. It's not. All right? But seeing the way the world is changing around here, stepping back and looking outside your feed and picking up clues from different things, will pay off a lot better for you there. Let's see here. What's going on, Spiral Architect? Black Man's Guide, what's up, man? Good to see you checking in as always. Brian Riley, there's my buddy checking in. Esmer says Strauss and Howell pegged the financial crisis in '08. Trump populism, Biden bland leader, current okay boomer, and more from back at '99. Yeah. A lot of interesting stuff coming up through there, right? 51 ETH, you're welcome for sure. Let me kind of catch you out here. Hey there, Carol. Good to see you, man. Looks like there's going to be more downside to complete wave C. Yeah. So looking at Bitcoin here, the update this morning, we were looking at this right here, and I noted that we were only up in 3 waves. And I said if we continued up, we had one of these 2 possible counts here, the black or the red. But I said, but we have to watch because right now we're only up in 3. So if it drops below this right here, this locks us in as 3 waves up and corrective. Now, so what does that change with everything else here? Well, I mean, let me look in here. This is the 1 hour. Let's zoom into 15 minutes. Let's see if we see anything better here. See, if I look at this, okay, I can see a 1, 2, 3, 4, 5, and then A, B, C, and then 1, 2, 3, 4, 5, A, B, C. So I'm thinking this could potentially be a flat correction here. Let me see here. There's about 7, it looks like, swings here. Let me zoom in a little bit more here. Yeah, so 1, 2, 3, 4, 5. Let's see, that could be a 1, 2, 3, 4, 5. I mean, so it's potential. And with this, if this were to reverse off just below this swing low here, it's possible we've got a 1, 2 as a flat. Now, we don't assume that. In 3 waves, we assume corrective, and a flat is a possibility. So right now, we could potentially look at this right here as 1 and potential 2 here. And so what we're going to want to see, 1, 2, 3, 4, 1, 2, 3, 4, 5. So if this is it here, then again, we get a 1, 2, 3, 4, 5. So here's 1, 2, 3, 4, 5. So you want to break above what we believe is wave 4. So this will be that first clue that this may be a flat correction right here. If we can get that break up through there. Ultimately, we need a break up above wave B, though, which is this one way up here. So you'd be looking for the breakout above this swing high, which is 46,131. And then you want to follow through with the breakout above 47,174. So if it is, then this will give us a wave 3 here, minimum wave 3, of right around 47,746.64. 746.64 would give you your minimum wave 3 there. You probably have a short wave 4, and then that give you this wider 5 up here, which should at least get to the EQ of this structure here right around 48,365, right in that area. If it is, okay. Now here's the thing, if we break down below here, then I think we'll probably break down below this wave 2 here. And if we're breaking down below that wave 2, let me look here. Let me see here. In that case, I would assume that this is going to be your A and your B here. And then this might just become a 1, 2, 3, 4, and a 5. So I would be looking, if we're going to lose this swing low that we just did here, and I would watch, you've got to lose this one, but I think we're going to lose this one then as well, which is your 45,289. And I'd look right here at that S1 pivot at about 45,000 or so, $45,050 as a possible wave 2 there, finishing there. Again, this being an ABC down for A, ABC up for B, and then 1, 2, 3, 4, 5 here is a flat. Just finishing out a little bit lower there. There's nothing in there that tells me that, again, that this needs to come down or anything. There's nothing at that point that says that. So we'll look for that only if it drops down. But if it breaks out here, you got your first target, your second target, and then you've got your wave 3 and 5 coming out of that. Let me kind of catch up with you guys here. Let's see. Black Man's Guide says Doge is still holding up. Yeah, I think we put a post out there not too long ago for tier 3 with some Doge targets for, or the Doge target there for Doge. Going on there. Let's see here. Joe, you've already got alerts on for me? Good, good, good. Sheepdog, you got a PS5 last week? Did you get that on that Walmart drop? That's what I'm assuming you might have gotten it on. That Walmart's tough, man. GameStop is the way to go, but you got to buy the bundles with that. You don't just get the simple. So instead of paying $500 for an Xbox, you're going to pay $700 or $800 for a bundle. Same thing with your PS5s. You're going to pay $800 and more for your bundles, because that's what they're trying to do to combat, all the bots and whatnot. So good times. It's a difficult thing, guys. I'm telling you, you're gonna have to fork it out to get it these days. Let me see here. But good, man. Good to hear that you got your PS5 though, man. That's awesome. Higher Low says, I'm new, but I felt like Elliott Wave theory during the summer crash helped protect me more by being more conservative. The price action seemed to be less conservative in the protection. I don't know. Yeah, Elliott Wave's a great thing to kind of just help you. Again, whether it's Elliott Wave or it's Wyckoff or whatever, it's really all about support and resistance. It's really all about that supply and demand and those support and resistance levels. And both of them help you look at them in a slightly different way, but they help you find those levels when you're doing it. So, yeah. Hey there, Droid DR. Good to see you. Blackman's Gut says, can you look at the weekly on SPY? It seems the market is now here. Oh, the down market is now here. Thoughts? Well, we'll see. Let me see here. The SPY. Let me see. I don't know if I've got a SPY chart at the moment. If I do, it's probably old. Let me see here. Oh, yeah, I've got one all the way from May of last year. But we'll take a look at the, you said the weekly on that? Let's see here. Weekly. Reset. Let's get rid of all this. Yeah, I mean, it seems like it's getting pretty close here. I mean, this is absolute craziness here. You haven't had a real pullback since this one here. You just kind of continue doing this, and as you're going up there, you notice volumes dropping off. Less and less interest the higher it goes. But yeah, it's going to run. It's potentially at or near a top potentially. We watch the SPX E-minis. We watch those a few times a day there. We track them and post analysis on updates on a few times a day there for our Tier 3 members. I think for our Tier 2 members as well. But yeah, I mean, if I'm looking at this, I mean, I'm locally, I'm watching this right here. I'm really interested in that. See if we get that breakdown in there. I mean, there's what you've got. You've got this ascending wedge, which is getting pretty close to it. There. So yeah, I think it's it looks like it's really near it. I can't tell you for sure. But if in my count, we're at or near the end of 5 up from the bottom here at this point now, with all the changes, everything going on through here. So definitely wouldn't be surprised to see that to finish off there. I mean, we could have like a 1, 2, 3, 4, 5. So there's a 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5, 5 there, pull back, and then 1, 2, 3, 4, 5 finishing up here. There's a few different ways you can count that in there, but looking at an ascending wedge like this, declining volume, you're topped out over, you're up here and overbought or right about it with your RSI. You've got a bit of bearish divergence up here. You've got these lower highs, and you've got higher highs there. And even coming just in general, your high was over here in January of 22 on your weekly here, or January of 18. I'm sorry. And then since then, you got a lower high, and now you got a lower high, but, here's your overall, you're still getting these higher highs here. So, I mean, here's the thing. When you get to, big kind of overextensions like this, you be aware of the possibility for downturns, but you don't stop out of the trend if you're going to trade it until you get that confirmation. Because it can continue pushing up. This is, that old saying about the market can stay rational longer than you can stay liquid. It's because of situations like this is what it's referring to. When you've got all this final end of end potentially coming up here and, everything getting out of whack, the breadth of the stocks that are moving up is, constantly declining, meaning less and less stocks as it goes higher and higher are making new highs. And that's usually a sign that your advance may be ending or maybe nearing an end. So yeah, I mean, if I'm looking at this right here, everything else aside, all you have to do is look at this ascending wedge off here. Absolutely crazy. You could even look at this if you want to count like a 1, 2. So there's a 1, 2 right here, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4. And then working up here, 1, 2, 3, 4. And you get into this 1, 2, 3, 4, 5. So you get that 5 there. But you know, the breakdown below this swing low right here is your macro key. The breakdown below this swing low, right below this weekly pivot. What is that, 319.80? If you're breaking down below that, that should be the end of the end. That should be this whole thing coming up should be done, and we should be heading down below 218.26, below that swing there. So yeah. Let me see here. Coming in. Andrew Bennett, what's up? Chris Day, hello, sir. Good to see y'all. Let's see. To kind of catch up to, let me kind of come down here. Let's see. TV Canal, what's up, man? I see you here. I still don't see a retest in the 42 area as a strong possibility. I guess you're talking about Bitcoin. It's a possibility, sure. But, you know, again, then we have to figure out, okay, well, what's this count here then? You know? You know, 42 is down here. And we'd have to figure out what the heck is going on here, if that's going to happen. And I'm not sure what that count would be at the moment here. I mean, it's possible. Anything's possible, as always. But until we take out what's happening here, until we get a definitive, you know, that this is going to drop down below this larger wave 2 that I've got here, you know, to me, it doesn't make a lot of sense to worry about 42 at the moment. I'm trying to think, how do we get to 42 here? How do we get to 42? Or I guess 42 wouldn't be my area. I think I'd be more interested in this 41 area here. Let me kind of zoom out a bit, guys. Yeah, you know, your 42 just kind of sticks you kind of in the middle there. I think I'd be more interested in this higher volume node catching it here, maybe around 40,000 than 42. Let's see here. Right now, we're playing around here with the 1 and 4 hour pivot here. We're kind of finding support in that area at the moment. Stochastic RSI on the 1 hour, let's see here, has dipped down into oversold. We're just on the bearish side of neutral for RSI here. Let's jump to the 4 hour and see how that looks. 4 hour, again, price bouncing in and out around oversold here. But we are finding support so far right in this area. We're kind of, it's this, see this right here? This swing high right here, that's resistance, kind of support right there. That's kind of where we're sitting at the moment. Zoom out a better idea on the daily here. I mean, daily's got some room it could drop here with Stochastic RSI. The movement down here isn't overly convincing at the moment, as you can see. You know, just finding support, resistance, support. You know, we had this bit of bearish divergence right here, then right here. But at this point now we've got hidden bullish divergence. We've got lower lows here on the oscillator. We've got higher lows here on price. So price would have to drop below this 43,714 and 36 cents to invalidate this possible hidden bullish divergence that may be building on the daily there. Let me see here. Let me see. You got it on the Walmart drop, sheepdog? Yeah. That Walmart drop is tough, though, man. It's tough. Geez, I tried Xbox Series X's to get some of those to give away on that, and couldn't even get it. But I think what ended. See, I'm not even sure what happened with GameStop today because I was just buying and buying and buying. I think I got cut off because it started saying I tried all these different payment methods I have, different credit cards, bank account, PayPal, all that fun stuff. And it kept saying, oh, we couldn't complete it. You got to make sure that your address and everything are correct. But I came back, to my email, and I'm getting all these notifications, so I'm not sure how many I actually got of them. So yeah. Oh man, it's good times, right? Oh, man, but I want to give them away. That was my big thing for doing them, give them away. So let me see here. Looking forward to understanding Elliott Wave and Wyckoff. Going through your instructional videos, still do not understand much when you say 1 through 5, A to C, etc. It will come though. Yeah. It's new. It'll come. Basically, the idea is if there's a trend, it's going to move up in 5 waves, which means 1, 2, 3, 4, 5. And then the corrections, those pullbacks are 3 waves, A, B, C's. So, again, when you're looking up here, this is the advance. So, it's 5 waves up like this and 3 waves back. But then there's, certain guidelines and rules for, how far the waves usually extend, how far they can pull back. And it's just really Elliott Wave, guys, more than anything else, it's just memorization. As long as you can memorize the rules and the guidelines and you understand the difference between them, you'll be doing, you'll be set up yourself pretty well for Elliott Wave. But it does take practice, so you still have to get used to seeing it. And that's what I try to do with the weekly live streams that we do for Elliott Wave and for Wyckoff. It's that idea that I take you out of the theory, the stuff that you read, the education you get, and we look at current charts. And I label it with you, and I talk to you about it and explain this is why we're looking at this way and this way. And if it's not playing out like this, then it likely means this other thing. And this is what we're going to look for price to do to verify one way or, to validate one way or the other. Again, the whole idea is seeing you actually, or for you to actually see it in practice, get off that whole theory thing. And because when we do videos and educational stuff and whatever, we try to find good examples, easy examples, so that you understand it. But the reality is, many times, the structure isn't ideal. Sometimes it can be pretty darn ugly. And that's why you have to understand how do you apply it and where do you apply it and what do you look for, rather than trying to zoom into the 1 minute time frame and count every little wave along the way, because that'll just frustrate you more than anything else. So yeah, you'll get it, man. Make sure that you're going through those videos, and then of course checking in with us every week on Thursdays at 3 p.m. Central Standard Time. Or if you can't at that time, then at least watching the video afterward. We always archive those videos for you guys to watch. Let's see here. That's why you like my channel. A lot of YouTubers out there selling wolf tickets. I'm not sure I really understand what that means, but man, I appreciate it. Again, guys, I'm not out here to do anything other than to really help you understand what's going on. And for a lot of people that come to my channel, that's not what they want to hear, and so they leave. And and then they're rude and disrespectful and whatever, either in the channel or after they leave, because they're not humble enough to understand that they don't know what they don't know, guys. And that's what it's all about, right? It really is about just understanding the reality that, and then this is in life, guys. When you're approached with something new, you have to be humble and say, you know what? I don't know what I don't know. I don't know much about it. And what that means is if you're trying to do it on your own, for most things it's possible, but you have to go through a lot of trial and error. And unfortunately, with what we do online, there's so much free, great information out there, but there's even more, a lot more poor information. Sometimes just half-truths. Other times, outright lies. Because you want to be told what you want to hear. And people have found that it's not about teaching you how to do anything correctly. It's about getting your money from you. And all they have to do that is to tell you what you want to hear. Because they know you're going to listen to them if they do. And you're going to spend money with them if they do. But that's on you. That's on y'all. It was on me when I first started too. We have to decide that we want to learn rather than just be told what we think we want to hear. Because again, if we're new, we don't know what's going on. We've never done this before, right? We don't know how to do it properly. And then I get always, the people that say, "Oh, well, I've been doing this for 3 years. I'm an expert. I'm a pro." They say I'm a pro. And then, so my first question is, well, have you been consistently profitable? What do you mean? Well, have you been making more money than you've been losing? No. Okay, well then you're still a beginner. You're still a novice. You haven't made it out to that next level. Just because you've been doing this, just because you've been feeding money to the markets for years doesn't make you a pro. But, again, as human beings, we want people to see us as these great things that we see ourselves at, which often is not the way we are. But if you're trading, that's going to lose you a lot of money. And you have to recognize that. It's like driving a car. In theory, you drive forward, kind of, most of the time, more or less. Yeah, exactly. Man, Droid, I appreciate that, buddy. Thank you for saying so, man. Again, my goal, guys, I don't have to do this. Yeah, I want to create, again, I told you, I've done this TWC thing because I enjoy the feedback that I get. When somebody says, man, I get it now. Or, man, you taught me this and now I understand more and I've made up my losses that I had before I found you or whatever. Something like that. That makes me feel great. I'm not doing this because I'm just a great person who does everything, to be nice. I do it because I get something out of it. And that's okay. Because you get something out of it because I do it. But if this whole thing were to burn down tomorrow, I would be fine. I'm a trader. That's what I do. This is all, additional. This is that entrepreneurial side of me. The side that wants to build. And so, that's what we do. So if you join us, or even if you join in the live stream here and you're not getting anything out of it, then I'm wasting my time. Why am I going to waste all my hours of my day here doing all this if I'm not going to get that return I'm looking for? That where it makes sense to you and it works for you and you get better. That's what I'm trying to get out of all of it. So, yeah. Let me see here. Better than a 1 in 10,000 NFT giveaway? Yeah, NFTs, guys. I'm not your person for NFTs. I'm going to be honest with you. I don't think they're setting up to be as spectacular as everybody thinks. I don't see the return in it. I mean, just as a business person, it doesn't, or as an investor, it doesn't make sense to me. I know what the arguments are. They're just not holding water with me. Because I look at, okay, what am I going to put my money into? Would I put my money into it? And it's a no. And then on top of that, right now that's really crazed. So you can make money. It's like anything else, guys. You can make money with it when everybody's, jumping into it and getting crazy with it. You just have to be careful because it could turn around tomorrow and be done. If all it is a quick fad. How many people bought those Beanie Babies and thought they were going to be buying and selling Beanie Babies for a living, and then it went out of fad, right? It wasn't cool anymore. Then all of a sudden they're stuck with all these Beanie Babies. Nothing to do with. Again, showing my age there that I'm talking about that. So, for some people it is what it is. That's for them. I'm definitely not your guy for NFTs though. I won't be putting any money in them. It doesn't make sense to me to do so. It seems exceptionally risky right now. I'm not saying I wouldn't at a later date if it proves itself, as it proves that it's something that's going to stick around for a while. But you guys know me. I'm very risk adverse. There's no reason for me to go put money in it just because there's a chance. I don't need to do it just because there's a chance. I'm good. I'm set. But it's because people get in there and they think they can make this money quickly that they're going to do it. And you can while it still works. But often in that situation, there comes a time where it doesn't work anymore. And you just have to be aware of what you're doing. That's all. And then understand don't lie to yourself about what it is. If it's untried and whatever, don't go around beating your chest saying, oh, it's the next great big thing. Because you might start to believe it. And you have no proof that it's got a chance of even being, right? So, yeah. Wait until your NFT gets DMCA'd like Sad Frogs and you get rug pulled. Yeah, see, there's always that as well. Those digital copyright things, man. It's tough. It's tough, right? Joy, what's going on? This is question on volume and price action. Can you explain the difference when you say price needing less volume to expand up is good, but wanting to see more volume on a breakout? So your breakout, you're going to see volume on a breakout. if it's a legitimate area of resistance, so we can draw lines all day, every day, right? From different points all over the chart, right? But if it's the point that you need to pay attention to, if it's the resistance or the support that means something, then you will necessarily see a larger candle and larger volume as it breaks through it. If it's not, then usually you'll see small volume, small candles, and it'll fail after it breaks out a little bit. It's like a fake breakout and fails. It goes back the other way. But yeah, it's just a way of noting where there's significant resistance. If you draw a line of support or resistance on there and price just hits on through it, large candle spread, large volume, you can all but be guaranteed that it's a legitimate breakout or breakdown. Like I said, you can't guarantee everything or anything in trading, but it's that good. It's all but guaranteed, right? Which means it still could fail. But if you've got a breakout on low volume and small little candles, small little candles like this here, just one next to the other kind of thing, or like this here, just these little ones, you have to be careful with that because it's a lot more likely to be a false breakout or a false breakdown because you're not having that crowd participation that you're looking for. But once you break out through that, and you're going up into another area, where you're just kind of moving up, often it'll be smaller candles as it continues higher and your volume's going to drop off. And that's fine because, people are taking profits along the way and less interest to go long along the way as it gets up there. And then, it pulls back and then it fires off again. But the big volume you want to see on those breakdowns or those breakouts of those significant areas of support or resistance, because again, that'll kind of do everything other than guarantee, everything up to guaranteeing that the breakout is legitimate or the breakdown is legitimate. It'll keep going that way. And this is the thing about price action and volume. It is nuanced in that way, and it's something that it gets easier the more you do it properly. But it does take time. Like anything else that you guys learn, you're going to learn to play piano or the guitar or the drums or, soccer, be really good at it or something, it takes practice. It's only once you've done something for a while that you start noticing those little small things, right? That you didn't notice before. Think of something that you're really good at. And then think of those little things in there that you didn't think about at first, that you didn't know about when you first started. And it's the same way with trading. And especially if you're using, volume and price action as kind of what's going on there. So, yeah. Let's see here. Can you revisit the bear div and bull div on the Bitcoin daily and talk about how when one invalidates the other? Let me see here. Well, it's not that one invalidates the other. I mean, okay. So you have this point here, right? So from this top here to this top here, you got higher highs, you got higher lows, and it pulls back. So that's finished right there. That bearish divergence completes on that pullback. All right? And then, of course, between that, usually when you have this overlapping like this, you'll see bear div, bull div, or, bear div, hidden bullish div, bear div, hidden bullish div. And that's just this movement between these right there. And so there's nothing that says, this much time or this much movement guarantees that it's over. Whatever divergence you're looking at there. But what you're looking for really, the easiest way to look for it is just use it in conjunction with other things you're doing. If you see that there's a potential bearish divergence coming up, zoom in a little bit earlier, into a little bit smaller time frame and look for the reason why it might, pull back. Like this one right here, it's right below the R1 pivot. Yeah, pull back. Hit it. Here's another one there. And it pulls back again from the pivot, and then it breaks up through it. And now you've got, again, one more there, bearish divergence. It pulls back to it. And now you're creating this hidden bullish divergence. You're building that. Looking for that break back up. So just use it, you know, everybody I think tries to trade off it, but I would use it more as a guideline, as an understanding of where a top or a bottom may be coming in. Unless it's a sharp movement, you know, unless it's a sharp change of direction, you know, in overbought or oversold that we usually look for, especially if it's, you know, followed by a large wick. You know, those are some good clues to help you understand that that divergence may be done or maybe, you know, starting or whatever with the price there. Let me kind of catch up with you guys here. Yeah, exactly. Yeah, they think they're doing well if they're up 15% and the market's up 25%. Exactly. Yeah. You know, and you should be striving to, you know, outperform that market. But when you're first starting to trade, that's why I say it doesn't mean that when you're first starting to trade and you're not outperforming the market that you should stop. No, you know, you got to start somewhere. When you're first starting out, the key just is to recognize that you are new and that you really don't know what you're doing. Just because you can log in and create an account and trade doesn't mean you know what you're doing. Just because you can run for president doesn't mean you know what you're doing if you became president, right? There's so many things. You know, so many people talk about, well, if I was president, I would do this, this, and that. Well, no, you know you wouldn't. You have no clue what you do because you really don't understand the job, what all is involved. You don't understand those intricacies and those other things that you don't know about. You don't know what you don't know. But you think because you could go and run for president that's enough. You know, it's the same thing with trading. You know, again, there's all those intricacies that you don't know until you're doing it on a daily basis. And after you do it a while, you start noticing more and more of them. Things you never had a clue about when you were just starting out. So, yeah. James Daly, what's up, man? You're concerned about the diagonal thing going on in the 4-hour time frame, QD Action says? Just to look at maybe this right here. Or maybe from down here. Let me get a different chart here real quick. Something more clean here. Uh, 4-hour. Man, we got all that. I guess you're looking at this right here. Yeah, let me see. Get something like that right there, maybe. Yeah, you know, you can look at it. This was something I was talking about recently, which was the idea that maybe we've got a, you know, this 1, 2. This could be a 3, 4, and this could be like a 1, 2, 3, 4, 5, maybe. And that's always been a possibility. Sure. But right now, with the current bullishness, you want it to. Let's see here. 1, 2, 3, 4. There we go. Okay. 1, 2, 3, 4. Oh, okay. You want it to go. You want to stick with what's going on at the moment. So if there's a good bullish trend, you want to stick with that until it proves that it's not anymore. Is what I'm trying to say. Okay. So right here, you'd be looking at this as a, you know, a 1, 2 maybe, and you'd have a 3 and a 4, and then you'd have to have a 5 up here. Let me just do it this way. And so then this right here would need to be an ending diagonal, which means it has to be ABCs, right? So, you know, how do you do this now? You can go maybe ABC is 1, 2, but then this is the higher one here. So this would be an ABC is 3, right? And then 4. And then ABC of 5. So I think you'd have to look at something more along the lines of this here. Because if it's going to be an ending diagonal, it's got to be ABCs. And so again, you'd have to look at something like this. 2. And then ABC be 3, 4, you know, and 5 as it's going up there. If you were to do that. And then while you're doing that, you'd have to make sure that this wave 3 is, whatever it is not the shortest. So let's say it hit right here. Then you're pulling back. Like that. You know, and then your 5 has to be right there where I'm at, basically. You know, would have to end up like that. So, I mean, it's possible, but I think you'd still be looking for further up. I don't think there's enough done here to complete this as an any diagonal, if that's what you were looking at. So that's what I'm looking at there. You know, when we kind of look at that. Because to me, you know, again, with the whole Elliott Wave thing, whatever, it's not enough just to have this contraction here. How is it contracting? You know, where are we getting at with it? And then, you know, the other big thing on these larger time frames, we've got the pivot right here. You know, and so that's what you want to pay attention to as well. There's no what's the word? There's no strong impulsive, you know, drop down below this area yet. It's still finding support right here, which makes a lot of sense. You had your resistance here, which became support. You had to move up here, it came back, came support, support again. So you've got this good area right here. You're just right here in this bit of a higher volume node right here. And if you pop out above it, you should be good to go for a bit higher up. Anyway, so yeah. Let's see here. And if you're looking at this whole thing as a bear div, this is not a whole bear div here, guys. Okay? This is a bearish divergence from here to here. And then it's hidden bullish divergence from here to here. And then over here, it's a little bit of bearish divergence at the slightly higher high here. And then it moves down. And so now we're coming from here. So this whole thing is not a bearish divergence here. It's from your points, from your swing highs and your swing lows, using those. That's where you're looking at, not from over here, ignoring everything that's happening, looking here. Now, overall, you're getting this point where the momentum's dying down, but that doesn't mean. But see, here's the thing: it doesn't mean it has to end. This could be. So what we see often in Bitcoin, especially, something that I noticed since 2017 when I came in the beginning of 2017, especially during that bull run there at the end of the year, there was a lot of this where price would then just rally right out of it. And so what was happening was accumulation was happening as price was rising. So supply was trying to come in, but there was just enough demand to soak up that supply and continue pushing slightly higher, slightly higher, slightly higher. RSI was resetting. And then once it got down here to reset, it took off again. Boom, shot up. And we saw a lot of that in Bitcoin with that 2017 bull run area. Like I said, especially toward the last half of the year, last quarter of the year. We saw multiple times that kind of thing happened. And I remember specifically on Twitter, was a lot of talk about it. I haven't seen it happen quite so often in a chart myself in other markets. I mean, I've seen it happen occasionally, but not with the amount of times it happened with Bitcoin, which I think is just the nature of you know what it is and where it is in terms of its adoption and whatnot. So yeah. Let's see here. Let me see. So yeah, I mean, you know, again, these are things you want to look at, but don't become so scared to enter that you miss the opportunity to continue riding the trend. If I'm looking here, everything else aside, if I'm looking here, I'm kind of looking at this, really. Let me see here. Let me get this. There we go. So this is kind of what I'm really looking at the moment here, locally, is this potential bit of what y'all might call a bull flag, or you can look at it as a descending wedge here. And so as a descending wedge, it makes sense that it's a wave C here. So again, ABC down for A, ABC up for B, and then maybe this is a 1, 2, 3, 4, 5, finishing a little bit lower like I was talking about there on the shorter time frame at the beginning. And then that gets your wave C as a flat right here finished up. So this becomes a 1 here, 2 here, 3, 4, 5 continues up. So, you know, this is definitely what I'm more interested at the moment. A breakdown of this kind of support here that isn't immediately brought back up into it. So you could have a throw under. So when you have a wedge, sometimes you'll notice if it's a descending wedge, you'll notice price will dip down below it and then immediately put back up. So you've got this candle with this long tail on it. And that, that's what you guys would refer to as a bear trap. It's just a throw under. And the throw under means price is going to rapidly move back up into it. When you have an ascending wedge, you have the same thing, but to the opposite. It goes above it. It breaks out through the top of it, and then immediately turns and comes back down, and that's a throw over. So if it's a legitimate throw under or throw over, you're going to have the breakout or the breakdown, and immediately price is going to run back up into the pattern or back down into the pattern and continue down. If it broke out up, continue down, or if it broke down, continue up. It's that bear trap that's the bottom, and then boom, it shoots back up. Now, if it breaks down below that support and remains below that support here, this descending wedge support, then that gets, then that looks like, okay, maybe this wasn't quite the wedge that we're looking at. And so we're looking for it to head further. Again, at that point, I would just look right here immediately at the 43.859 kind of area here, the S1 pivot there on the 4-hour chart. Let me see here. Can I check out .USDT? Yeah, I'll see if I can get around to that. Sure. Is this real, brah? What's up, man? What do you make of people calling this a dead cat bounce? Is that something that you pay attention to? I haven't. You have to be careful when you talk to me about what other people are doing, because you can ask Tier 3, man. I'm so busy with them all day long. I mean, I'm starting 7:38 in the morning until usually midnight, 1 a.m. So I don't really have a lot of time to follow anybody else to know what they're saying or to understand the context. So are you talking about, when you say dead cat bounce, you talk about this being a dead cat bounce? If so, here's my thoughts on that. It's something I talked about last week, I guess it was, right? If we look here at this immediate drop, this is kind of the range. You can look at this. You can look at this right here. But in either way, what you're getting here, especially if you're looking up from this point here to this rally up here, is you see the price hits it, pulls back to this previous area of support here, and then rallies up through it, tests it as support, continues up, continues up, continues up. And so this move that takes us above, this 40 to 42,000 area here, I think that makes it much less likely that it's a dead cat bounce. Could it still be? Yeah, it could be. But I just think this move makes it a lot less likely that it is. Overall, from the highs, you think you're at about a 50% retrace from all-time high? Yeah, and so, I guess people look at that and they'll say that, or, you can look at this right here. You can look at it this way. Let me see if I can get this done right here. This interior move here that has this right here. And so you have this, touch at support, touch at resistance, touch at support, breaks out, comes back. It finds support at that previous resistance, breaks out, comes back, support now at that previous support, and then breaks out higher. So things like this make it less likely, in my mind, to be a dead cat bounce. And so, if it had happened over here, like if it got rejected here and continued down, or even rejected, in this area down here, continued down, then yeah, I think, that would make a big case for it. But the fact that we broke out, came back, retested, and continued higher over this area here, over this kind of area right here, I think that just adds a lot more confidence to the idea that the bottom is likely in. Again, no guarantees, guys. I can't promise you. Nobody else can promise you, okay? But when we look at the evidence, it suggests that there's a good possibility that bottom's probably in. Now, things change if we're dropping below wave 2 over here. But that's a large drop, right? So before that, you want to look at big areas of support and resistance. This is a pretty major area here. So I would say that as long as we are above this swing low right here, we're probably good to go for further upside. So this is kind of this 37,355. You know, and I can even say between that and this one over here, 36,404. You know, between that area there, as long as we are above that area, as far as I'm concerned, we're probably heading up higher. You know, our thoughts and whatnot should be higher. If we break down below this, so below this current for our S4 pivot right here, if we're dropping down below that, that doesn't guarantee that we're going to go to lower lows, but it increases, it wrenches the odds back to that side that we're more likely to do that at that point. But while we're above it, overall, we should be considering that we're probably headed higher overall. I don't think, yeah, you know, when you look back at the 2018 drop from 20,000, then the pullback to the 70.5, so potentially we can go to 54 and then new low. No, I don't do things like that. That has such a strong likelihood that you're going to be wrong that it's not worth it. You know, again, guys, price action rhymes. You know, it rhymes, but it doesn't repeat. It rhymes. Okay, so you're not going to get this. You're not usually going to get that same thing. You might get something similar, but you're not going to get the same thing. So when you're looking at that drop and you go, oh, well, we need to pull back now to do that, you know, it doesn't, for what I know and how long I've been trading, it doesn't make sense to me. It doesn't work out often when you do that, because this is a whole different thing. You know, that works because that was the all-time high. You know, you would have to assume that this is the all-time high, and then maybe you might get that pullback. This would have to be a wave 2 pullback, which is possible, right? I mean, this is possible. 1, 2, 3, 4, 5. We know this is possible, one down, and then A, B, maybe C, right? It's possible, sure. Anything's possible. But you start looking at the likelihood based on the structures and what's going on and everything else. So what's going to happen here is if this turns down and goes down, people are going to come back here and they're going to make a lot of noise and be a lot of idiots. And they're going to say, oh, look, you were so wrong. You were so wrong. But nobody's really listening to what I'm saying. I'm not telling you it can't. I'm not telling you it's not possible. I'm just saying with the way it sits right now, with the way the structure is right now, with the way things are going right now, it's less likely than likely to do that. Now, new information can come in tomorrow or next week or something. New chart information that makes it a lot more likely. But right now, it's not that likely. But even at that, you know, like I said, I can't say it's not going to do it. Just saying it's not as likely. It's more likely to head up for right now. But yeah, until we're getting that breakout above the swing high here, yeah, sure, you've got that possibility it could come down. Sure. But again, right now, with the way this is all moved, you know, I'm kind of going on the idea that we've got, remember, wave 3 ended here. And we've got ABC down for A, ABC up for B, 1, 2, 3, 4, 5 for C. I mean, we're looking at this expanded flat here. And so that's what I'm looking at the moment. But, you know, again, it is still possible, like we talked about. And I'm going to keep repeating this so you guys don't make silly comments like that. But, you know, again, we were talking about the possibility that maybe this is an ending diagonal here. Right? We've talked about that. Sure. We've talked about that. And that's what keeps open the idea that maybe this could just be an ABC heading up here. But again, when you're looking at things like ABCs and whatnot, price is almost up. If this is a wave C, it's almost 3 times the length of wave A over here. Of this wave B here, okay? And while it's possible wave C can extend like that, usually that isn't what happens. Usually it stays below 1618. So see, again, you're talking about odds, guys, when you're trading. You're talking about possibilities, and are they likely or more likely? Well, it could still be an A, and then a B is a flat, and then a B here, right? To finish out B. So 5 down is A, ABC up is B, and then 5 more down is C, right? Sure, that's possible. But with how far this, this would be A, this would be B, and this would be C of B, as far as this is gone, it decreases the likelihood that it's a wave C and increases the likelihood it's a wave 3 because of how far that is extended. One more time. It doesn't mean it can't be a wave C and that it can't turn down. But it does mean that the extension on it shifts the odds toward it being a wave 3 rather than a wave C. Okay? I hope I've said that enough times in enough ways, guys, for you to understand. But it's no doubt when I say things like this, I always get some Yahoo who comes back and does exactly, oh, look, you were wrong. How was I wrong? I never said it was definitely going up and it couldn't go down. As a matter of fact, I said it could still go down. I even explained to you why and how it could. And somehow all you got out of that is that I'm wrong somehow. You're an idiot. And I don't use that term lightly. So if I ever call you an idiot, just know you deserve it. I don't normally do that, though. But seriously, that's the kind of nonsense we have to deal with all the time when we're doing this. Because you don't know what you don't know. And you're going to latch on to whatever you want to latch on to. There's not enough open minds with new traders. They're closed-minded. They assume things are the way they are, which they aren't. And then, anything that doesn't work out that, like somebody else said, becomes, oh, you were wrong kind of thing. So, yeah. That's why I tell you guys, man, stay off social media with your post about trading or whatever, because it's just going to get you a lot of idiots on there who aren't paying attention, who really aren't trading, who really don't know how to trade. They really don't know what it means to trade. And they'll beat you down with experience, guys. Experience being an idiot is what I mean. They'll beat you down to where you're just beyond tired. It's not worth it. That's why, like I said, when people come up to me like that online, I just block them. And then I get people saying, oh, well, you shouldn't block them, free country, blah, blah, blah. Yeah, free country. Go be free somewhere else. This is my timeline or my social media feed here. I don't have to have you around. If you're trying to destroy my mental health, nah. But not enough of us do that, guys. You guys you got to stand up for yourselves in that way. Who cares what some other idiot online says? Okay? Let me see here. Yeah, the dead cat bounces are usually pretty short as well. Yeah, so TV Canal brings up a good point there, the 38.2. Usually is where you're going to find it. Going up higher than, especially when you get above 50%, get to 50% or higher. It could still be, but usually it isn't. Again, we look at what's likely versus what's not likely kind of thing. Or, what's more likely versus what's less likely. Yeah. Hey there, 83 men. Good to see you checking in. Let me kind of catch up with you guys here. Just in time says 2018 is built different. Yeah. We know in hindsight that 2018 was a drop off the all-time high, right? We don't know that this is the all-time high, and I don't think there's a great case for it to be made that it is. We have to see how it plays out. I can't tell you it's definitely not going to go down or it's definitely going to go up, guys. But right now with everything, my bias remains to the top unless we start dropping those levels I've already discussed, today and prior. Unless we're doing that, to me, there's no reason to be looking for that downside. That further downside below the swing low here. But, again, new traders often get caught up in that. They get scared because, again, they don't know what they're doing. And so they're scared to enter, and so the price continues to ride up without them. And then they get more and more anxious because price continues to go up. And then guess what? They buy at the top before there's some sort of pullback. They just can't handle it anymore, and they finally buy in, and then price does its thing and turns around and heads back on them. And then either they're too large a position size, too leveraged, and they get wiped out, get liquidated, or they freak out and they sell at a loss. Usually about the time it reverses to head back up. Yeah, because they're scared, finally, they're scared it's going to continue any further, and finally just had enough and get out, and then it turns around and goes back up. So, yeah. Joe the Butcher says people are referring to a schematic of redistribution without much context and calling it that dead cat bounce. Yeah, guys. Again, the best thing I tell you, you're going to see people always, and some people I like a lot personally, are out there talking about Wyckoff without any volume price action relationship, and it's frustrating because it is a requirement, guys. Wyckoff is not about structure. It's not like it looks like this. Elliott Wave is about structure. It's not about time. It's not about volume. It's not about price. It's about the structure of the movement. Wyckoff is about your price action and volume, not the structure of the movement. But you see what everybody does. They bring up the schematic and they say, oh, look, it looks like this, so it's doing this. But they can look the same. What you learn with Wyckoff is your distribution and your accumulation or redistribution or reaccumulation can look exactly the same. It's just an understanding of where that volume is coming in with the price action. That's what it's all about. But that's not what you get online, guys. And unfortunately, if you're new, you get suckered into it because it sounds right. It looks like you go, oh my God, it's got to be right. But you don't know anything about Wyckoff, right? And this guy's got a lot of followers. So he probably knows what he's talking about, right? Yeah. Worst thing that can happen is he can get lucky and end up being right. And then you start thinking, oh my gosh, he knows what he's talking about. And then you follow him and you start losing money. But you consistently lose money because you say, okay, he was just wrong this time. He'll be right next time. Oh, he's just wrong this time. He'll be right next time. That's what happens, guys. And if you haven't done that yet, praise the Lord. But if you have been trading for any amount of time, you probably have gone through that. I was fortunate that when I came into trading back in 95, long time ago, there wasn't social media and the internet wasn't this big, huge thing like it is now. It was prior to AOL's unlimited dial-up. When I started, and so I didn't have all that to follow people, and have them telling me and me to follow them. But I've seen it a lot. Talked to a lot of traders. Y'all talk to me all the time. That I see this is a thing that happens often. So be careful out there, guys. Okay. Let me kind of catch up with you guys. Mark, have a great day, buddy. Tell your rider checking in. Did I see somebody say hi there to him? Glad you didn't fall off your ladder there, Mark. Let me see here. What's going on, Peter? U.S. Bitcoin ETF in 2020 or 2021? That's a good question. The SEC's got a lot of pressure right now. They got more people pumping that right now than they ever have. And we know that they're not exactly staffed really strongly, right? If they do approve an ETF, I think if we're going to have an economic meltdown, then I think the ETF approval would have to come before that. I think if we have that economic meltdown, I don't think there's a chance an ETF gets approved because Bitcoin is such a risky asset. And so economic meltdown means risk off, which means the markets become risk off, which means things like Bitcoin are usually some of the first stuff to get sold off because it's so risky. It's such a risk-on asset. And so, there's no confidence for the SEC to allow an ETF to come through where people can put their money in this stuff and watch it go down the tube in that kind of environment. So I think if it's going to happen, it's got to happen before there's any type of economic meltdown. But I do know that the SEC is going to feel a lot more pressure because you got a lot more people doing it now. And some big names too, really kind of getting into this whole ETF thing. What is it, Galaxy Digital or whatever? I believe they're putting one together. You got the same guys who've been doing it for years now, resubmitting again now. You get some other big ones trying to get them in as well. I think as long as as long as nothing significant happens that Bitcoin just dies off, I think there's a great likelihood that we're going to get that ETF because there's so much bigger money that's into it right now. And there's more and more legal clarification, which means even larger money can come into it or can start coming into it as more of that legal clarification comes off. Yeah, everybody gets scared because of, regulation and whatever. But, again, guys, where we're at, you need the big money to come in to take us higher. You're not going to take it higher on retail. And so how do you get that bigger money in? Well, you have to have legal clarification. And, crypto is still a murky area here in the U.S. So the regulation helps give legal clarification, which gives these larger funds and things the ability to get in. So, yeah, I think it's where you kind of be looking for it to head to. But it's not a simple thing. That's why it hasn't been approved yet. It's such a risky asset. There's little legal clarification right now. We're getting more and more, or threats to get more and more. If you looked at the infrastructure bill there and the crypto language that was in there. But, the other side of that is, especially if you're here in the U.S., they can always slip something in which says, if you're not an accredited investor or something, you can't be involved in it, like they do with hedge funds. So there's always that possibility. Something I've warned about for years now. That would be the great big bad possibility for retail. That would probably be the worst case scenario for retail. Because, people are getting into it and they haven't reached that accredited investor level yet. And then they get set out. They've got to sell out, before they do, and they never get the chance to really enjoy it there. So they've helped build it up with all their buying and selling along the way. And then they get cast to the wayside so the big funds and everything can now have it. And these things happen, guys. Tell you, Ryder, what's up, man? He says traditional IRA customers have to be feeling the FOMO to have at least some exposure to Bitcoin or Ethereum in their plan. Yeah. And, like Terry Ryder says, these are traditional IRA customers. You guys know there are self-directed IRAs out there where you can invest in crypto. They'll let you do that in there. And that's a great way to go if you're looking for longer-term wealth, guys. If you're not looking to make money today, if you're looking to cash out years down the road, that would be the way to do it, because then you get those small tax bills compared to what you do right now. So much easier on you. So yeah, it'll be like tier 4 only for accredited. Oh, are you talking about for TWC? We'll create a tier 4 only for accredited. Oh man, LXT, what's up, man? Good to see you here. Rich says traditional IRA guys I know buy GBTC and Coin and Mara and Riot. Yeah, they get access. They get exposure to crypto without actually having to buy crypto. Yeah, for a lot of people that aren't really hip to what's going on with crypto and whatever, that's an easier way for them to do it because they understand. A lot of them understand the stocks and whatnot. That side of it. This other shit doesn't really make much sense to them. But if they're buying Coin or Mara or Riot or GBTC or something like that, then they're dealing with stocks. And so they feel more comfortable with that. Yeah. Let's see here. So and we got here. Okay, random question. VYGVF gets delisted due to a newer SEC reporting rules. If you still own those shares when the rule goes into effect, how do people generally sell or buy after that? Good question. Yeah, so I mean, just because it gets delisted, it depends. I'd have to look at what that one is and what those reporting rules are. But it just means you can't trade them on those exchanges anymore. You can still sometimes trade the shares off those exchanges. You can still do that many times. I'll have to look at what that. I've heard about the SEC reporting rules. I haven't actually looked at them yet, though. I've been too busy. But yeah, I'd have to see exactly what those rules are and then check out what's going on with VYGVF. I can't even say it. To really see what's going on with that. But yeah. Yeah. Again, you should be able to go trade it over the counter. I think you shouldn't have any problem with that. I don't think there's anything in those new rules that would make that not happen. You don't end up trading them on the exchanges. But I'll have to look that up again to be sure. But yeah. Let's see here. USDT somebody was asking about. And then we can look at TLT here as well. Matter of fact, I've got TLT here. So there's TLT. Again, we had this symmetrical triangle, or this ascending triangle breakout, almost hit the target. And then we came down and we did a 1-2. Looks like a 3, 4, and a 5. We're breaking out here. We filled in this gap now. Pulled back. Trying to get up there now. Let me see, what is this? This right here. Oh, it's a parallel channel. Okay, yeah. So this large parallel channel here, this is the EQ. You see broke out, pulled back to it, filled in this gap, and now we're trying to rally off it here. You got this dip down and oversold the breakout of the 1 hour here. And you can see this came off this bullish divergence down here. So off that, you've got this big move up here for, so far, just over 3% already off that. Breaking out above this descending channel resistance here should give you a pattern target of 5.74 above the point of breakout, and that's based on the height of this here. That gives you a wave 3 target. I think it's still right about up there. Let me make sure here real quick. Right about like that. Yeah, right up here about 178 for your wave 3 on that right there. So, I mean, this looks nice here coming off. You've got a nice, very bullish range over here, where you've got the higher highs and higher lows breaking out that range. And then you have the large volume, the large candle spread. So it's a breakout. They jump across the creek right there, back up the edge of the creek, SOS, back up, SOS, back up here. Do another range there before heading higher up, it looks like. So, I mean, it looks like we're still good to go up on TLT. Let's see here. The daily, we've got a lot of room on Stochh RSI and even RSI here. As you can see, gapped up through the daily pivot here, and then came back and retested it, and now we're heading back up here. So you had this potential reversal, but remember I told you it's not going to be a reversal off one candle, it's going to be a pause. So we got a pause. No follow-through says it just is likely going to be a pause, and we're going to continue further up. Swing high here at 148.56. Swing low here at 148.67. So this becomes, you got this still tad bit of a gap here through the pivot. But, again, want to break its way and continue up there. So it looks pretty good right there. Let me see here. You love the tier 4 idea? Man, aren't I busy enough for tier 3? I'm not sure I could do tier 4. I've got wave 4 done. I've got possible 1-2, 1-2 here. With this minimum wave 3, this interior wave 3 here at the R3 4-hour pivot, which is also the pattern target here based on the height of this descending channel, which gives us a wave circle 3 high up here at around the R4 pivot, just below it there, 32,210. Secondary target up there, 35,8440. You can see where this initial target and secondary target are in terms of what you're doing sideways here. They both make a lot of sense. Resistance, support areas. The higher one is here at the actual EQ, or at the actual HVN though. So you might see it make it that high. But overall, this is wave 4. We should be breaking out above. My thought is that we're heading up above this here. If there's another thing that kind of makes me think that Bitcoin is bottomed, it's not dropping back down below the 28,000 swing low there, is the fact that these larger caps they've got their own like ABCs done here, ABC, and so they should generally move in tandem. As Bitcoin is rolling up and higher and whatever, in general, your large cap should go with it. So, you know, even though the structure is a little bit different, they've got an ABC down rather than 5. Their 3 down says, you know, it's just 3 down. Boom, it's done. So that says that they're going higher, and if these large caps are going higher, then it makes sense that Bitcoin goes higher as well. So there's another reason why I think that that bottom may be in down there. Oh, sorry guys, give me a minute. I gotta get something to drink here, man. This talking, never get used to it. Let me see here. Andrew Bennett, what's up? Says, not sure if you saw my question from earlier. Have you ever looked at the chart total to Bitcoin? It's an altcoin comp to Bitcoin used. Shows a breakout, maybe showing an altcoin price breakout. Yeah, altcoins are looking great right now, just in general. I actually do have that chart, I believe. Let me see here real quick. I think I might have it with this one. Nope, that's the Bitcoin market one there. I know I've got it here. Ah. Do I have anything newer? This one might be the one to look at here. So I was looking, last time I looked at it, a possibility looking like this here. And so then this is obviously something different playing out here now. Let me see here. That'd be AB. 1, 2, maybe a 3, 4 right there and a 5. So it might be something more along the lines of this here. And we don't actually get a spring. I mean, overall, I expected it to go higher. As you can see here, I had 4. I was looking at the potential of getting a spring here, but we didn't get a spring. We actually got just this this pullback here. So if we look at the volume here, that volume drops off at each of the swing lows, which is what you want to see. This is bullish and up, so we should be looking for this to continue up. It's broken out of the range here. So you had stopping phase, which is phase A. You have your phase B here. You have your phase C. You have your interior marker, phase D, and then you have your exterior marker, which is your phase E going on here. So yeah, we're looking for a breakout higher here. Probably around 1.9 trillion at least. This just becomes a... let me see here. Can we look at that as a test? Our test is really right here. It's a secondary test. But really just, you know, again, pulling back, dipping just below the range low, but still not anywhere, you know, not as low as the ST and phase B here. So then coming up here, so then we have your show of strength coming out there. This move right here. And then you pull back here for your LPS. And then it just kind of continues up with that as it breaks out through here. And so we'll probably look for a pullback here, probably around, it would make sense that it hits this kind of area right here potentially. Yeah, let's make that a little bit lighter there. Actually, you know what? I said that, but I think probably this area right here is probably where we're looking. So we should get this pull back into here and then the breakout higher. But yeah, I think it's probably headed up there. We've got all this decrease in volume down through here until it breaks out higher, and then we see the expansion in volume. That's what you want to see. This is just a, as you can see here, I've got 2 little ranges. This is reaccumulation after decline. So you've got your distribution that happens up here, and then your reaccumulation that happens up here. But this whole structure is a reaccumulation structure. It's just 2 parts to it. You've got the decline, you've got the distribution up here, the decline, which then becomes this reaccumulation and breaks up higher and heads out. So yeah, alts I think are probably headed up higher overall. Sure. Let me see here. Jason Rich says, if enough time for tier 4, you really do kill it in tier 3. I do, man. A lot of time out of my hand. I got to figure out a way to spend less time doing the daily stuff. Because, again, working from 7:38 in the morning till, usually about 1 a.m., sometimes 2 a.m. in the morning. Gets old after a while. I love what I do, but, man, it's a lot of hours. But, yeah, so, Andrew, that's what I'm looking at. This is all set up. It just didn't give me the spring I was maybe looking for. But overall, expected this to be, based on the wave structure here, reaccumulation heading up and out. Also, Elliott Wave gives us a, wave 5 target up there coming off well down here. So we've got all that coming up there. So, yeah. Things probably looking good. You're very welcome. Let me see here. How might you update the coin play you mentioned? Let's take a look at what's going on with coin. Let's look right here. Oh, I don't think there's anything to look up yet. It's doing what I was talking about it doing, pulling back A, B, C. It's probably getting near. It's probably getting near the reversal. This is the daily. Haven't quite hit oversold yet, but I bet you that 4 hours oversold. Yeah, see? That 4 hours struck there. We're bouncing right off the S1 pivot. Let's see if we can get a better look at the waves here. Here we go. So there's A here. There's B here. 1, 2, 3, 4. This is 5. I mean, I think it's probably around this area. It's probably bottoming out. So I would look for a breakout above that descending channel resistance right there as the first clue that the bottom may be in. That'll give us a pattern target here of right about $27 almost above the point of breakout. And then, of course, if this is correct here, again, the idea that we had a leading diagonal here. But this could still just be, leading diagonal is A, and then this is B, and then we have C. So the first place you're going to watch, oh, look at that. It's right there at the high volume node. You see this right here? 332.54 kind of area. That's your first target. If you get a rejection and it comes back down here, that means this is an A, a B, and a C, and we're heading lower. But if it continues up through that toward 385.72, that means it's likely wave 1, wave 2, and then wave 3 up here. And so then that would give us, minimum wave 5 at about 418.60. Remember, I did say minimum. This is the daily supply structure here. So I wouldn't expect it to pop through right away. I'd expect it to hit the bottom like it looks like it's going to do, pull back, and then push up into it, and then potentially pull back and then push up. So you get a wave 1 up, 2 on the back, and then 3 up like that. So yeah. Canal, you're welcome, TV Canal. But yeah, I mean, right now it's doing exactly what I was talking about last time. It went up to my target that I was talking about prior. So I mean, we're on a roll here with coin, guys. This has been easy money, right? Like I said, we had this one target here, and it popped right above it, and then it's pulled back right here to my target where it was. So now we just need to see a reversal off here and head up. By the way, like I said, first clue that the bottom may be in is the breakout of this descending channel resistance. You're going to get added confidence to your account if it pops up above wave B here. Again, this is the idea that this is A, B, C here. Right there. So jumping up above wave B at 266.21, that should add a lot of confidence to the count here because that says 1, 2, 3 waves are complete once it breaks up through that. And 3 waves are corrective. So that's what I would be looking for, but definitely once it gets above, wave 1 up here, you're good to go up higher. Like I said, we just don't know if this is an A and a B and a C coming or if this is a 1, a 2, and a 3. Right now I've got it set as a 1, a 2, and a 3, but watch that 332 area. If it gets rejected there and comes on back down here, and what you would need to see is for it to drop below this wave 2 here. But really, your first clue to be careful, to really be watching it, is if it drops into wave 1. So if it gets up here around this area up here, 332, 352 kind of area, and then it pulls back and it goes down here into wave 1, which is 294, drops into that, I would be really cautious. To me, that would say this is probably going to be an ABC. Further drop down below the swing low over here would confirm it. Because again, it would just be 1, 2, 3 up, and then you've locked that in as corrective, and we're heading lower. But if it continues up through all that, doesn't break down into wave 1, continues up here, then again, wave 3 up there around 385, minimum expected target. Gives us a potential minimum expected wave 5 target of 418.60 or so. So yeah. What's up, Block Tech? Always good to see you, man. So yeah, I think a lot of these guys, I think a lot of it's just in general, I think cryptos are headed up right now. Now, there's always going to be some that kind of buck the trend and don't do exactly what everybody's doing at the same time it's all doing it. But, there's some time there. I know I've got some longer-term plays in XMR right now. XMR, is that what it is? Let me see here real quick. Give me just 1 minute, guys. I'll tell you what it is. Let me log in here real quick. Let's see, it's that one. It's that one. Find my authenticator stuff. Okay. And now, let's see here. I think it's XMR. XMY. Yeah, XMY. Really low price right now. But I've got some serious low entries in on that. And that's a small cap, so I'm looking for that one to break out, later than everything else. But looking to really kind of ride that one up for a bit. And then, playing the XMY BTC pair, you get, as XMY rises in relation to Bitcoin, you get that profit. And then when you cash out to Bitcoin itself has also been rising up against the dollar, become more valuable. So then you get that exponential profit on top of it. So that's what I'm looking to do with that. But that's one of the ones I'm sitting in right now as far as that lower cap goes. Looking for some higher side on that. So yeah. Can I show what chart? You guys got to be more forthcoming with your identifying information. Makes it easier for me because sometimes I get talking, showing things, then I go back and I want to do things if I can, but it's hard if you're not helping me out. Let me see here. Any idea on meme USDT? Let me see here. I don't know if I've got a chart. Let's see. If not, we just pull it up. Nope, no chart. But like I said, we can just pull it up here. Let's get rid of all that. What's today? 17th. By the way, man, I'm in a big habit of dating my charts when I create them and then writing updates if it's an update or something. That way I've always got this record of where I'm going through with it. The great thing about Discord and what I do over there, guys, is I don't try and blow smoke up your rear end. I tell you that being a trader, sometimes you're going to be wrong, sometimes you're going to be right. And all the things that I've ever posted are sitting in there. So you don't ever have to question, is he telling the truth when he said that he did this, that he posted this. It's always in there. But, again, unfortunately, let me see if I write this here because I'm trying to think it ain't working at the same time. USDT. Unfortunately, new traders often come in and they think that you have to be right all the time. And then people tell them that that's the way it is. And they end up losing all their money with that. And they don't know why. Well, it's because you weren't thinking correctly. You don't have to have a winning rate. Mine's winning overall. But you don't have to have a winning rate. You could lose 3 out of every 4 trades. And as long as you have proper risk management, you can still live a ridiculously crazy lifestyle. Depending on how much money you have, obviously, in the market. But, you know, you can continually still, even if you're losing, even if you're only winning 1 out of every 4 trades, you can still be profiting and increasing your capital account. But it's all about risk management. Y'all always asking me after the big pumps. You need to be asking before the big pumps, guys. Let me see here. I assume that's probably a 1 and a 2. What are we at here? Based on log sale, there we go. Yeah, about a 70.5 to 78, sure. 1, 2, 3, 4, 5. So that's a 1, 2, 1, 2. This is either 1, 2, 3, 4, 5. So it's a 1, 2, 3, 4, 5 still to go, or it's a 1, 2, 3, 4, 5 done. Let's see here. If this is 1, 2. Yeah, see, that's pretty close to a wave 3 right there. 1, 2. So you normally look for that 3 there, your 4 on that pullback, and then your 5 a little bit higher here. If I'm looking at this, I'm interested in price eventually hitting wave 5 up here in this supply structure, potentially right around this EQ at about 1190. Zoom in a little bit more here. So this looks like so that would be 3, but it's going to be higher than that. Let me a little bit bigger here. 2. I'm just assuming a 1, 2 here because I'm running out of time. And then right here you've got a 1, 2. 1, 2. And so this probably gives us a 3. Yeah, because you go 1, 2, 3, 4, 5. Yeah. So 4. Oops. But then you get that higher high locally there. Let me zoom in more. Now see, this could be a 3, 4, and then this slightly higher high could be a 5. Like this, your 4 would be up in there. This would be your 5. And then that would give you your 3. And then that pullback there would be your 4. This is probably a triangle right here. Your 4. Where's my other 4 here? There we go. 4 on that. That gives you a 5 up here. That gives you a 3. Working on 4 here, probably to this area, you know, where this other triangle is here. And then, like I said, again, wave 5 probably taking you right up to around, that's the R4 pivot almost on the 1 hour, 4 hour there. Right around that EQ. Let's see here. This is actually going to be up there, right there. See, it's the 1618 right there, probably the wave 3. Wave 4 is pulling back where you'd expect it. And you can look for a breakout to head back up above this R1 pivot here, right around 770, 775. That'll probably be a good clue that the bottom may be in. And then wave 5 minimum right here about 1078, but potentially up here around the EQ, potentially up here to about 1200. I think there's a good chance of that. Now, because I zoomed in like I did, there's always the possibility that this isn't 3, 4, 5 here, that this is 3, 4, 5 up here. So it's all 1 degree less. So then you have this 3 up here instead of this 3, this 4 over here, which gives you then this 5, like this. And this 3 over here, 4, and then 5 maybe gets you that EQ up there. So I wouldn't worry so much about the counts. What I would look for is, just to make it easier, is to look for this breakout probably above this 1 hour R1 pivot here. I can't get there. Right around, like I said, 770, 775. Get a breakout above that. It's probably a good clue that the bottom's in. Of course, confirmation coming on a breakout above the swing high here. But then I would look for a target right here around 1058 to 1078. And if it continues going up above that, then we'd look up here around 1194 to 1237 kind of area. Because again, if the count is correct here, then it could go here, or it could continue up to this EQ area. Or if it's the other count, the alternate count, which shows you, this is going to be over here, then what you'll probably see is something along the lines of this. Up there. Something like that. So that's why we just, watch for the breakout and then watch for that target and potentially that target there as it moves up. So, all right, guys. I'm going to have to get out of here. Yeah, on that coin, John Rankins. Yep. If you don't know, I make money. So, yeah. But I don't do it because I follow everybody else. So, if it doesn't go up, feel free to come back and make a lot of noise. If it does come up, come back and feel free to say, yeah, you were right. Simple as that. But anyway, guys, hey, listen, I got to get out of here. It's 1 o'clock. I appreciate you guys checking in as always. You guys are a lot of fun. I appreciate you, seriously. We've gotten to this point where we have so many less, trolls out there, and it makes it a lot more enjoyable experience, I think, for everybody. So, again, guys, as I tell you, you come here, I'm not going to tell you the things you want to hear often. Most often it's going to be things that you don't want to hear because they're the things that you need to hear. And I'd rather give you those things so that you have a realistic look at what's going on rather than, just blowing smoke up your rear end just to get you to pay for something. That's stupid. That doesn't make any sense. I have no self-worth if that's what I was doing. But, people do it out there all the time, so you guys got to be careful, okay? As always, you can join us there at the top of the show there. I've got that coupon code. You can get in with us at Tier 3 there, 40% off your first month. And like I said, guys, just come prepared to soak up a ridiculous amount of education because we got over 100 hours, 110 hours of video educational content. In addition to everything we're continually putting out. So even if your intention was just to do it for a month, just make sure you make the most of it, okay? Of course, we'd love for you to stay. Anyway, as always, guys, remember, you can do that at howtotradetowin.com, but remember, the only thing you control in the market is how much you lose. That's it. So risk management is absolutely what it's all about, guys. If somebody else is telling you different, understand that they are not a real trader. And you don't go, oh, but they're just a real trader, just not the same as you. No. I've been doing this a very long time, and I don't know anybody that stayed in and made money over a couple years without good risk management, much less as long as I've been in, or as long as Peter's been in, Peter Brandt, or Mr. Bollinger. So, do what you need to do with the info, guys. Lead a horse to water. I can't make you drink, though, right? You got to decide and be humble enough to understand that you don't know what you don't know. And that what you think is right is most likely wrong because you don't know what you're doing here. If you can do that, you've got a lot of potential, guys. You got a lot of potential to be great traders. If you can't do that, you won't ever be a great trader, I promise you. Because you're going to keep yourself from learning those things you need to learn, okay? All right, guys. Anyway, we'd love to see you over in Discord, but again, if not, I will be back on Friday at 11 a.m. Central Standard Time, so hopefully you guys can join in, all right? For the Friday stream, you're going to be at your sister's wedding, LXT? Well, hey, man, enjoy that wedding, all right? Congratulations to your sister. You guys have a great week, and I will see y'all later. Take care.